Hello and welcome to the trade on this Monday. Before we get into the charts, let's take a look at what traders are considering out there today. There's no guarantees there'll not be a recession in the United States, although there could be an adjustment. That's according to Treasury Secretary Scott Bessent. He said in an interview aired yesterday, speaking to NBC's Meet the Press, he ruled out the chance of a financial crisis. Well, once the United States has imposed tariffs on its major trading partners, it could engage in bilateral talks with countries on new trade agreements, according to Secretary of State Marco Rubio. Meanwhile, US President Donald Trump is expected to speak with his Russian counterpart Vladimir Putin this week on ways to end the war with Ukraine, with US envoy Steve Witkoff telling CNN yesterday after returning from what he described as a positive meeting with Putin in Moscow. China's State Council unveiled what it called a special action plan to boost domestic consumption, featuring measures including increasing residents' income and establishing a childcare subsidy scheme. And gold broke through the key $3,000 barrier on Friday for the first time, with investors having piled into the asset to seek some cover from the uncertainty we're seeing on markets at the moment. Let's now get into the technicals. Michael Gable joining us from Fairmont Equities. Michael, welcome back. Good to see you. Plenty to watch at the moment. Fascinating to see how this is translating on a technical perspective. Let's begin with equities. Of course, many of the major indices, certainly seen that on Wall Street, having tumbled into correction. Of course, our own markets sort of following suit there. What are we seeing? Bit of a bump today.
Yep. Look, I think that the bounce we're seeing will follow through, and whether we're up tomorrow or not remains to be seen. But I think over the next few weeks, I'd expect some sort of bounce from here. Now, whether that bounce gets sold into heavily and we retest these lows or even surpass them remains to be seen. But usually, when markets pull back by this amount, you do get some sort of recovery. Now, it'd be interesting to see, of course, how strong that bounce is. So, the bigger the bounce, obviously the higher underlying strength there is there. So, what I've identified are a couple of key levels where I think this bounce will start to slow down. So that's around 8,100 and 8,300 on our market. So if we start to hit resistance around 8,100 and really struggle, that won't be a great sign. I'd like to see our market at least get to about 8,300 before it slows down a bit, and that could indicate that the recent low is a major low, and just like in August last year, we may end up to new highs. But look, it's only the first day up or second day up after that pullback. So yeah, 8,100, 8,300, that's the zone where I think the bounce will start to slow down.
All right, okay. Those are the key levels to watch out for on the ASX 200. Michael, let's switch into commodities with a focus on gold. I just mentioned there, having eclipsed that $3,000 market.
Yeah.
Markets, I guess the goldies particularly were looking for this to happen. Finally, we're there. A lot of this based on, of course, investors seeking the safe haven amidst the uncertainty and volatility we're seeing at the moment. What's the chart telling you?
Look, it's a fantastic looking chart. This is a monthly chart, so going back about 20 years here. Now I've spoken before about the breakout last year through that sort of low 2000 region on gold should lead to a big rally, and if you're only looking at gold in the past year or two, it looks like it's gone a long way, and numbers like 3,000 feel like that. It's achieved a lot. Maybe it's time to start selling. There are some even more bullish targets closer to sort of 3,500 for gold. But if you zoom out and look at the monthly chart, for those that follow technicals, you'll realise that the recent move it's still early days. So because it's taken so long for gold to break through that blue line, it'd be highly unusual for the move to only last 1 year after it's spent so many years waiting to break through that sort of 2,000 region. So, look, I think the rally in gold is much further to go. You'd see a 4 in front of gold this year.
A 4?
Yeah, look, it's just based on the charts, look, I can give you some other targets, but I might sound like a bit of a crazy person. But if we look at previous moves on gold, every time you got a proper bull market in gold, if you equate that to what we're seeing now, I mean, you could see even more than doubling of where we are now. But let's not get ahead of ourselves. There's a very strong uptrend in gold. I think any dip is worth buying. So look, the moves just started.
Goodness. And is that where you're getting that after at the moment, or would you be tempted to get into the gold stocks?
Oh, look, I've been buying it as recently as last week for clients. So, you could buy a gold ETF. Individual stocks obviously have particular company risk. There are gold company ETFs out there as well. We're quite sport for choice on the Aussie market when it comes to gold.
All right, now before we get into the stocks, just take a look at currencies. Now, the US dollar having really reflected that US exceptionalism over the past year or two, that seems to have faded. What are you seeing?
Yeah, so US dollar definitely looking weak at the moment. So it broke under some key support there, which is that blue line. This is a weekly chart of the US dollar going back a few years. There's definite momentum on the downside now. You get little bounces along the way, but I'd expect the US dollar to continue to weaken, and that will be a positive for gold and other commodities.
Let's now turn to local equities. First one I'm going to take a look at is South 32. And, well, what are you making of that chart? Is that a downward trend then that has developed?
It is, but it looks like it's poised to break through that. So, as I mentioned, with the US dollar looking weak, mining stocks, they're having a strong day today. I think that will continue to follow through. So South 32 is obviously the spin-off from BHP 10 years ago. There is a downtrend there, that blue line, but what I like is that it's spending a lot of time just under that blue line. It's sort of hugging the underneath of it, and to me it looks poised for a breakout. So for our viewers, I'd keep this on the watch list. I think if you could see South 32 start to push through sort of the high 30s, the high threes, like a 370, 380 share price, I'd declare that as an upside break, and you'd probably see a swift move back up into the mid fives.
So staying in the resources sector, now take a look at Sandfire, the copper miner, and over the past couple of years certainly it has had a positive trend. Where's it going to from here then, do you think?
Should continue to go higher. So I was having a look at some copper charts on the weekend. Long-term charts look quite bullish, and Sandfire has been trending higher for a while now. This chart goes back a little over a year. Just nice profile where we could see it rallies quite strongly, then it consolidates. That's what I'm indicating by the blue lines there. We had an upside break in September, gave us another consolidation, and then it broke higher again several weeks ago. So it hasn't got too far from the breakout. So I'd say even current levels is still a buying opportunity, and should just continue trending higher.
All right, yeah, certainly the copper price has been moving higher and higher over the past month or so. Let's round it out with a look at Lynas Rare Earths. Rare Earths also very much in favour at the moment, given what we're hearing from Donald Trump wanting to secure those rare earth projects. But we take a look at Lynas Rare Earths. Over the past 2 or 3 or 4 years, it's been pretty flat, really hasn't gone much anywhere, has it?
Yeah, it's definitely lost ground across sort of 2022, 2023. Money piling into tech stocks and leaving all the resource names behind. But this chart's a bit similar to that South 32 chart, but where with South 32 we're waiting for an upside break. Lynas has already done that, so we could see that on this weekly chart it made that upside break. Looks like a few months ago. It's come back to retest that line. And now it's really starting to get a move on again. So still looks like a buying opportunity. I think that'll head to sort of double digits and continue to recover.
Michael, terrific to get across those charts. Thanks for joining us on Fairmont Equities.
Thank you.
And that is the trade for this Monday.